Hi guys, so here's another episode of a recap backtest session of today's price action. So yesterday was Monday, and this is our current situation at London Open. So there are a few liquidity pools. First one, of course, is this one, which just has been taken. So this is a daily swing high. Then what we have are those relatively equal highs right here. So these are daily equal highs. And to the left, we have more daily equal highs. And then, of course, we have this major daily major high. So this could be a purge and revert, or maybe it continues higher to take out those equal highs as well. So let's see on the low time frames what's been going on. Well, you can see sell side of the curve, buy side of the curve. So this market model has been finished. And here we are in, on this time frame at least, in a premium. So let's go to the 1 hour. 1 hour is still bullish. As you can see here, we start to reject the daily swing high. This is Asia. This is the start of London. So for me, this is a tricky area because we take our major buy side liquidity. We have this wick, and I'm not sure if we're going to reverse or going to continue higher. So let's see. Let's see what we get. Let's split the screen. Right, so here I have the, let's do the 5 minutes, the 1 minute. So the 1 minute over here, in 1 minute is ranging. This was Asia. Here we have the 15 minute. So let's see what price is doing. As you can see, the time at the bottom, it's 1 minute. Okay, so price is immediately at 2 o'clock trades higher. So this could be a accumulation, manipulation, distribution move. You're not sure. So at this moment, I'm not going to trade because it can go either way. We have a significant area, the daily swing highs. We are very, as you can see, very high in the leg. You're at 1, 2, 3 pushes. So yeah, let's see what price wants to do. So we took these highs and then we start to consolidate. We're moving sideways. Okay, now we start moving up. So now it gives me the idea that it wants to go for this daily equal highs. But I'm not going to buy here. That I'd like to buy at the retracement of this move. If we get a retracement, if we do get a retracement, but we now have a shallow run on this high. The price action is still bullish, and of course, oh, I'm sorry, no, not all that our thing is. Okay, that's weird. Oh, there they are. Oh wait, I cannot copy values on the FX replay. You have to draw them out. So these are daily equal highs. And this is the daily major high. Okay, so back to 1 minute. Let's see what you have now. Still bullish, obviously. Also here in this one. Yeah, still bullish. So let's see what price wants to do. we did take out this low, right? So this could be the manipulation phase of this accumulation phase. Then we expand it higher, taking out also Asia high right there. So let's mark that out as well. Those are some key time-based areas. Was Asia high? Asia high. Asia high. There it is. Trading below Asia high. Strong close below this low, but we are bullish. So let's see what we get. Another rejection of those equal highs. Okay. So what do we have? At the 15, when you look at 15, we took out Asia high. We took out those daily equal highs. And now we have a, what do we have? We have a dealing range, right? From this high, from this low to this high. Let's make nice and blue because it took out this low right there. And now it took out this high right here. So there's a dealing range. And at the 62% level, I'm now using the optimal trade entry, the optimal trade FIB numbers, lines up perfectly with the 62, the opening price. So, and also at the optimal trade entry is this order block with a fair value gap, opening price, and a daily swing high. So that are a lot of confluences over there. Let's not show this on the 1 minute. Okay. In the meantime, what do we have in 1 minute? We have equal lows resting below here. Price is taking them out at this moment. And again, we are now tapping into this fair value gap. And there price goes. So it wasn't even necessary to close below or went below the opening price to the order block. Just this fair value gap was enough to send price higher. So now we extend this dealing range. Because in 1 minute, yeah, there's this new dealing range, but on the 15, this is this dealing range right here. Took out this swing low. Yes, it took out this candle right here, but this isn't the swing low. Here it took really the sell side liquidity, not here. So now we took out these equal highs, closing back below daily equal lows. Okay, I'm expansion and we're expanding. Okay, let's remove this one. Okay. Price seems to be in a hurry. There are not really any pullbacks. There is one, potentially. So now we have this low to this high. There's 9 minutes left for the 15-minute candle to close. Okay. So now we have the swing high formation again. So now we want to measure this low to this high. 50% lines up with this high, which can act as support. But price traded into this fair value gap already here, but it's resting inside premium. So I'd rather see it go to a discount, but I'm not sure it wants to go there because this daily equal highs is also a PD area which can act as a strong support level. And obviously you have this low, right, from on the lower time frames. So maybe if you look on the 5, yeah, on the 5 minute this is a dealing range, but not on the 15. Or you could say these are equal lows get taken. So maybe in that case you could draw it like this, and in that case makes more sense, right? because daily equal lows, equal highs are now in discount, and also the fair value gap lines up with the 50%. So that's nice. So then we see this reaction. We only have, yeah, here's a swing high, there's a swing high right there. So this is changed in the state of delivery. So we could go wrong from here to target those equal highs because price is heavily on its way to get there. So that creates a new high. So now it reacts to this order block. And this is a bit nicer price action because now you can use CSDs as your entry. Look, this fair value gap is now traded through with displacement. Price fails to take out this low, price respecting those three big highs. So this is a nice fair value gap. So you could take a long right here, right? I would take my below this because those are equal highs, equal lows, I'm sorry. And target those high. We're going in at a limit. Not sure. Yeah, now we are tagged. There we go. Now we took out this high, and we also halfway, so I'd like to take out some partials. Yes, please. Price came back. So we got a new, let's remove this one, all the lines. What is our current dealing range right now? Obviously, this is our new high. This is a swing high, but this side didn't take from this high, yeah. So we are still at this dealing range. So the 50 is right there, just below this low. So that's dangerous position, but let's see. Okay. Now let's see what is happening here. Price is going down, but it doesn't have any displacement left. As you can see, we created this short-term low that's now get taken. Price now found support at those daily equal highs. This is a rejection block, right? Big wick. Body's all equal. Took out this liquidity right here, the body. So yeah, let's see. Time almost the end of the London Open. So now we have lunch, and markets has shifted again with speed and displacement. So this gives a confirmation with the right track of the right side of the curve. Down close candles are now supporting price in the 1 minute again. Also, we did create a small swing low, kind of a turtle soup. So let's look at this for a sec. This is swing low formation, right? This high, this low, 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 higher low, swing low. And this swing low took out this low right there, because this is also a swing low formation. A low, a lower low, and a higher low, same as this formation. But look, this swing low took out this low, but closes back in the range. So usually this means this is a failure swing, and a rule of thumb is that the high that is created, this low, is now being attacked. So this low was created by this high right there. So that is a nice confluence to have, to see this high being attacked. Well, that's exactly what happens now. This high is now being attacked, and we're very close to our TP right now. So since I don't want price to go back in this consolidation because this is now all going back and forth, which should be a balanced price range. So, and also we're very deep and very close to my TP. So I don't want to have any losses on this trade. So I'm gonna trade break even and put my stop loss just above my entry to cover expenses. And I'm just gonna let this trade play out, and there it is. So this is a very nice entry. So to recap this trade, what happened was we saw Asia taking out this daily swing high, right? Then the question remains, are we going to reverse from it or are we going to continue higher? Well, obviously we went higher. How did we notice it? Because we had an explosive move to the upside and price never came back. So let me see, where did we enter? Here we did enter. Visible. Okay, why is it visible on the 15 minutes? Not sure. We entered at 04, somewhere in this candle. Somewhere in this wick. We entered somewhere in this candle, that's where we entered. Which makes sense, right? Price respected this value gap, then price showed intention to go higher, rejected this high, not a swing high, but just a high. And then the daily equal highs acted as support, which let's go to daily. Yeah, it's this high, right? So it's very precise price. And let's also mark out this previous high. This is our previous day high. Previous day high. Okay, so let's do the 15 again. So you see the same thing happening here, right? So Asia is taking out the previous day high, then trades back and finds support at this previous day high. Then it takes out some liquidity, and then we have a new expansion leg to the upside. Also, remember this. Look how price is consolidating right here. Price is consolidating, taking out the sell side, and then we have an expansion move higher. So this is the first leg born from this accumulation. Then price goes back, went sideways just before London. So it's generating orders, it's accumulating orders, taking out sell side, exactly the same as it did here. Accumulating orders, taking out sell side, expansion. Accumulating orders, taking out sell side, and we have an expansion. And this expansion is the second leg born from this accumulation. And I always count 3 legs. So this is second expansion leg. This is showing intention. This is strong. It always gives you hints that it is respecting a fair value gap, which means the institutional order flow is still active. Then price breaks higher with force. It goes above this high with strength. Then it starts to go sideways again. This time it took out this swing low and then closes back. So here we have a different kind of setup, kind of turtle soup. And then we closed higher. And somewhere in here, we took the trade because we saw that price was respecting the daily equal high. Price was trading inside of this fair value gap. Price was respecting the consequent encroachment. Bodies closing in the upper half of this fair value gap. And I think that's a nice confluence with the daily equal highs, and then price goes higher again. So this is a third leg, right? So this was leg 1, low, leg 2, low, leg 3. So now we can expect, usually after 3 legs, you can expect a deeper discount. But look how shallow the pullbacks are, right? So this means that we are in a low resistance liquidity condition, which means shallow pullbacks and strong bullish candles. Now obviously it is lunch, so which makes sense because what we can now anticipate is a classic buy day where London makes a bigger move up, lunch trades lower for the retracement, and then we can expect New York to trade higher again. But okay, let's see what happens. But this is a review of the trade. Price is bullish. We have our daily highs with the target met. So let's see what happens next. So this is now lunch until 7. So let's fast forward to a little bit more faster to 7. Oh, there we go. Even lunch is trading higher. Okay, so now we're taking a reversal. Now this is third leg. Leg 1, leg 2. We weren't yet reversing. Now we are reversing. So we have still some liquidity left. That major high, the daily. So I'm gonna remove Asia high. This one. Okay, now we are almost at New York open. So now it's New York. So what do we see? We see push, consolidation, push, consolidation, push, consolidation, right? Now we took those daily equal highs, so we took some more liquidity. And now we're trading below those equal highs. But here's the current range we are in right now, from here to here. And price tag just by a bit, ever so slightly, into this fair value gap. Almost touching this high right there. So what do we anticipate? I anticipate a fake move, the protractionary move of New York, which should be lower to take out maybe all these equal lows, and then reverse higher to take out this high and eventually this daily major high. So I'd like to see now price to trade into the 50% of this range. It's not a dealing range, in my opinion. Or maybe, yeah, maybe it is, because this low took out this swing low. So yeah, this is dealing range. Took out the buy side, took out the sell side right there. So let's see what will happen. Okay, there we go. So now we're tapping into this big wick, into this fair value gap, and into discount. We are now waiting for something bullish on the 1 minute. Apologies. So we created those equal highs, equal lows right here, and we took them out, and we're now shifting bullish. Yeah, for me, let's see. I want to see some more bullish price action on the 1 minute, that we are really confirming that we are bullish again. Okay, so now what we have is nice. This candle took out these lows, then we moved higher. We broke this structure right here. We took liquidity of these equal highs with this candle. Then price made a failure swing right here, went lower, but this low did not take out this low, and now we see displacement. So now we have a failure swing to the downside. This rejection block did its job and sent the price higher. We don't have really a nice swing high. This is the nice swing high, which is now has now a closure above. So now we have a fair value gap, and this This I think is a nice entry. Also avoid my balance. I'm going to put my stop below this low right there. And I'm going to target that high. And I'm going to take off some partials when we break this or this high, depending on how price is moving. So I think we are tagged right now. And if we weren't, we are now. Look at it. This is displacement, and this is meaning you are on the right side of the market, which is nice. So we have really momentum. Now this daily equal high is now acting as support. And if we look here to the left, this is an order block, I guess. A breaker maybe on the 5. You can go on the 5. Because we have a low, a high, lower low, higher high. So this candle right here, this bullish candle is a breaker, but if you would consider the wick, then yeah. There we go. We got some nice speed. We break this high. That's gonna take some profits. Thank you. Since we took this high now out, we can now expect a retracement. And remember, this is a first leg after the retracement. Okay, there's the retracement. Could be a deep retracement because we took out this high right there. And since we took out this high with the we are bullish, so I'm not sure. Okay, notice that I did not move my stop loss. And yeah, okay, so that's a pity. Would be way more safe to end the trade, but anyways, it was okay. So price once takes out this high, turtle soup also takes out this high, created by this low, but it was already taken. This high was created by this low, so we can expect this low to get taken out, which happens right now. So we're back in the side of this fair value gap, like so. This is news, okay. Okay, so what happened here is, look at my price is coming back to the consequent encroachment of this fair value gap. Oh, I'm sorry. So here's a break in market structure with a closure above. So we have this low to this high. I'd like to see price trade above this fair value gap again. So now we traded this whole fair value gap. Okay, that's nice. So I've got some nice bullish reaction. Okay, now yeah, I think this is a nice entry. Why? Because we negate the bearish PD arrays. Price fails to take out this low. I'm ignoring this low for a bit, but anyway, this low also fails to take out this low, and this is really displacement. And we took out these equal highs right there, right? Then we trade lower. So we took out liquidity here with this price action. Then we trade lower, and then we failed to take out this low, and then we have this expansion higher above the fair value gap. Price trades back into this 1 minute fair value gap and trade and closes right here. On the 50-minute, what we see is that price did not take out this low right here by a few pips. And price is closing inside the fair value gap. It's not closing outside the fair value gap. So you might say this order block is holding, and now this, and price is reacting from the 70.5 level. So yeah, I'd like to long this. my stop right there. And now I'd like to attack this one. Because now price took out this low and just this against order flow of the 15. But I think prices also at bearish dealing range right now at this moment. Wait a minute. Let's see what you have. You have this low. So price is respecting this dealing range because it takes out. But this, no, this internal liquidity. I'm sorry. Now, this is the current dealing range now, right? I had prior set it to this high, but this is the more higher high, and then you just move your high to the highest point. And yes, this is a bearish dealing range, but notice that we did not take out the low of the bullish dealing range. So this is all internal liquidity. Price just took, also with this wick, it took, what did it took? It took only this sell side liquidity, which is part of this bullish dealing range. Only when we trade below this low, then this dealing range was violated, and then we had external to external liquidity. But now it's taking internal liquidity. So therefore we are still bullish. And also we're still bullish because price is closing inside the fair value gap. Yeah. Some of you might see this fair value gap, right? So let's look at the fair value gap, right? Let's look at this bearish fair value gap. Yes, price is respecting the consequent encroachment, right? So that's the bearish argument you might say that we have. So we took buy side liquidity, was taken by this wick. Then we're looking, okay, this is a turtle soup. Which low had created this high? And we go back, it was this low. And this low now also got taken. Next, there was news, which respected this low, did not take out this low. It respected the order block, right? We are closing above the order block right here. This is just a mitigation area, price traded into it. Also notice this fair value gap. I just saw it. Prices keep respecting this fair value gap, and now it's respecting this fair value gap again. So what we have is we are in a bullish market. I think that's obvious. News is respecting a bullish PD array. News is taking internal liquidity, and from this internal liquidity, this is liquidity in discount, right? It's below the 50%. And that's in your favor of the bullish. And only the bearish argument was that we have turtle soup and we have this fair value gap which got respected. So, of course, there's also now daily equal highs that could act as resistance. So, and I think what you can say is that this is more of a risk entry and waiting to see price getting above. So let's do that. Respecting the bearish value gap. But look how it fails to send price lower. So now we have traded through. We're now taking out those relatively equal highs. Notice how it respects at this moment this order block and this fair value gap. So this is a very nice entry, by the way, to trade, look for higher prices. So now this equal highs is now acting as resistance. So now the roles are reversed. First it acted as resistance, the mid-level. With speed we traded above it, and now it's acting as support. So now we might expect one move lower to take out the sell side and then move higher again. Because also notice this. Price is consolidating. just above the 50. And prices takes off. And probably, so now it's going to add another high to this daily major high, which retail sees as a double top. And now we have a body close above this high. So we have a new dealing range from this low, because it took this sell side, took the buy side dealing range. But I'm not sure it will go back all the way to 50%. No, it's too far. I don't think so. Because this is now all balanced and stuff, so maybe on the 5-minute. It will trade into this fair gap to take out this high, I'm not sure. No, it just comes straight, forming a 3 drive. From the 1-minute, that's nice. We have a nice range from this high to this high. Almost at the 50%, there you go. Took out sell side, tapping into this. And now this could be your long. And there you go. So we could have entered low, and after that we didn't have any possibilities. And maybe this right here, but I don't. Yeah, you could just go long, I guess. I'd like to see some more confirmations as a double CSD or whatever. What price now took it out, and this is now London close. So that was the price action for today. Yeah, I hope you liked it, and yeah, speak to you next time.